Today, I'd like to talk about the issue of lending in minority communities and the impact of that lending and what happens in terms of wealth creation. I think a very important topic, a topic that is particularly related to a discussion that many are having today in terms of structural racism. Is there structural racism? What do we mean by it? How do we describe it? That issue is debated back and forth. So I think this is a helpful aspect of that to illuminate it a bit. $8.7 billion in help to increase lending in minority owned businesses and people living in poorer communities with limited access to banking has been given in a program called the Emergency Capital Investment Program. And it was created this year in 2021 as part of the ongoing recovery from the effects of the coronavirus. This money will go to 186 community-based financial institutions. And what it is seeking to address is what we call the wealth gap, which I think is something that's very important for us to understand. There is a wealth gap between minority communities and the white communities, and this wealth gap is a very significant gap. And there's also what we call a home ownership gap between minority communities and white communities. And of course, the two are certainly interrelated. If you can't afford the housing, because of the wealth gap, then that certainly is an issue. Black entrepreneurs are 3 times more likely to report that a lack of access to capital negatively affects their profit margin. So what we're dealing with here is a significant issue among those who are Black, who try to start businesses, who try to increase the size and scope of their business. There is this threefold difference between Black entrepreneurs and white entrepreneurs. So again, this is a significant gap. Black Americans represent 13.4% of the U.S. population, yet Federal Reserve figures show that they control just 4.3% of household wealth. So this is what we mean by the wealth gap. If they are 13.4% of the population, but control only 4.3% of the wealth, this is going to create a significant problem as far as advancement in the Black community, as far as, how do we go about then, when we see this significant difference, how do we go about addressing it? What are some ways that we can really remedy this situation? More than half of Black household wealth is in the term of pension entitlements. The difficulty with that is they're entitled to the pension, but that pension cannot be passed on to future generations. Much of the wealth in the white community is passed on from one generation to the next. So this is going to be then really an ongoing problem, a significant ongoing problem that is going to, really further enhance that gap. The inequality makes it harder to qualify for business loans and mortgages to build their real net worth. So the situation is, if you have this wealth gap, then how do you qualify for a loan? To grow your business, very difficult. And then how do you qualify for a mortgage? Either a mortgage, home mortgage, or a mortgage in terms of owning a store, a property. This, again, is a problem that's just going to feed upon itself, really, because if the wealth issue is in some way not addressed, then how do you build wealth, and how do you qualify for mortgages? How do you qualify for loans? It becomes obviously a real issue. 54% of those funds, of the 8.7 billion, is going to go to banks, and 46% will go to credit unions. And the distribution range for the funds is from 200 million to $100,000. So this is one way the government is trying to address this inequality and to expand opportunities for minority businesses. And again, it's a measure that's looking to address a problem, a significant problem in our society. When you see a wealth gap, you kind of say, well, what can we do? Should we just ignore it? Should we just wait it out? Is it going to get better magically? What is going to happen in terms of this wealth gap? Most of us, I guess, first of all, probably are not aware that there is this significant, 3 times significant wealth gap. Many people feel, it's the fault of the people themselves. They're not working hard enough. They're not industrious enough. That's certainly one philosophy that's out there, and something that you hear occasionally. But really, this issue is one of those issues that relates to what we call structural racism. Because if there is this significant wealth gap, and if there is no remedy to make this wealth gap disappear in some ways or lessen in some ways, and if it's just going to continue, and if it's going to accelerate, this is going to be a problem that is really kind of structural in our society, that is going to be difficult for those in minority communities to overcome. Of course, the counter argument to that is, well, we're a meritocracy. You've just got to deal with it. You've got to work harder. You've got to try different strategies. And there is, of course, that thought out there, and they will point to certain examples of, well, this black entrepreneur did this, and they're successful. Why can't somebody else? And there are those examples. But I think you have to look at the overall issue here. It's certainly a significant issue. There's a significant wealth gap. There's a problem with so much of the wealth, 50%, just being in those pensions that are not going to be passed on to a future generation. So that future generation is going to come into that same system, that same structure, and be penalized by it. So I think what we have to do is find, as this program is trying to find, some creative ways of dealing with a significant problem in our society, a society that we certainly want to make more just in any way that we can.